Welcome everybody to our panel about institutional DeFi. We want to do it a little bit differently. Before we talk and you can't follow us, we decided to bring in two very short introductions by myself and Markus Hämmerli from Zuehlke. So we just take 7 to 8 minutes to introduce you to the concepts of DeFi and what that might mean for institutions. And Zuehlke will add some very practical examples in that space so that you get a feeling. And afterwards, we get the rest of the panelists on board. We'll bring Jonathan Lessmann from Zuehlke. We'll bring Hagen Weiß from Dentons and Peter Grosskopf from Unstoppable Finance. Each of them have very individual perspectives on the topic, and I'm really proud to have them on my panel. But let's lose no more time. You all know these headlines from January. Bitcoin ETFs. Now, institutional players are able more easily to invest into crypto assets. But is that all? We think it's not. It's just the beginning. So, if you will, the crypto world found ways to get into the world of the institutional players. But we think, similarly, the institutional players now will move closer to the world of the crypto assets. And that's what we want to talk about. So we want to dive a bit deeper into this new world of blockchains and crypto assets and research what's actually in it for institutional players. But before we do that, I want to introduce DeFi because many people talk about it, but actually we don't have a common definition. So let's take a look into a normal blockchain ecosystem. Just bear with me. We have a foundation layer, a market infrastructure layer, similar to a financial market infrastructure layer. Here we bring basic infrastructure features like consensus algorithms, the blockchain itself. On top of that, and that's what we all talk about all day long, is an asset layer. Crypto native assets like Bitcoin, Ethereum, maybe NFTs, and stablecoins. Stablecoins are a little bit different because they have real-world dependencies. We need to know the fiat price, so they might behave a bit different in this ecosystem. But then, most importantly, on top of these asset layers, we have a value layer. And this value layer has two components. A built-in native value layer, for Ethereum, for example, that's staking. You can just stake against the blockchain itself. You can earn a yield of 5 to 8%. And then you have DeFi. And DeFi usually are third-party financial services, if you will, if you compare that to the traditional world. So far, so good. What does that mean? It's not so easy. You might have heard of DEXs, decentralized exchanges like Uniswap. These things work quite differently. They work with automated market makers, and you as a user can provide liquidity into these markets. So a very different kind of mechanic beneath the surface. You have tools like Balancer or Curve for stablecoin swaps, for example. All of them work in a very similar fashion. But that's not all. Most people stop here. We have borrowing and lending platforms like Aave, Compound, Maker. You might have heard of MakerDAO very prominently. But there's even more. There are vaults, there are index funds, there are investment strategies like behind Yearn or Enzyme Finance, for example. But there's even more. There are trading aggregators like Matcha by 0x. There's 1inch, there's CowSwap, Coincidence of Ones. Some of them are really fascinating beasts, extremely versatile. Then we have derivatives, perpetuals like synthetics, GMX. We have liquid staking, restaking. I just want to give you an impression. It's a vast field of different technologies built up as Lego blocks who all work seamlessly together. And finally, and that's what's most important to me, is there are even DeFi front ends. So this is the part where you can actually see what's beneath the hood. So tools like Summerfi, Zapperfi, or DeFi Saver, they come with a nice user interface to abstract away the complexity of the whole DeFi landscape. Just to give you an impression what we're talking about. That's, to me, DeFi. Now we might ask ourselves questions. So what's in it for us as institutions? How can we interact with this world? Should we care at all? And I argue, yes, you should. And we think you can interact on 4 interesting levels. Level 1 is analyze it, look at it, learn and adopt. Level 1 is what Project Guardian of MAS in Singapore is actually doing. They look at each of these DeFi projects and analyze what's in it for us as banks, as a classical financial sector. That's a good approach, and you can say yes or no afterwards. Number 2 is what companies like Tesla or Societe Generale are doing. They actually interact with these DeFi services. They take loans from MakerDAO for their investment. Tesla used that, for example, to build the charging infrastructure in the US last year. Number 3 is embracing these services and offering them to your clients, to your institutional player clients. That's what fintechs usually are doing. Let's take Finoa, for example. They offer institutional-grade staking services and make them available to institutional players. And then there's level 4, where you can actually, as an institution, try to extend and augment DeFi with your own assets, with your own stablecoin, with your own real-world assets, with your own financial instruments that are certainly tokenized. That sounds nice, but how does that look like? Just one interesting graph as an overview. If we go back to our overview with the DeFi system, then we might interact from the very top. We might just use DeFi from the very top. But there's more to it. You just heard in the other panel that everybody is not talking only about stablecoins, but different kinds of digital money. They go into this sector. You create your own tokenized deposit. We will see CBDCs interacting with this world, so that's down there in the middle, if you stay in this area. But there's more to it. We will hear from Jonathan about Zuehlke. They are actually building, besides the public available blockchains, an institutional-grade blockchain system. They will create tokenization platforms on top of that, which might interact with the other world. And then we finally have regulated marketplaces. That's what the DLT pilot regime is all about. Yeah? This is the picture I would really like to implant into your heads, that you get a little orientation what we will be talking about in our panel. And we will come back to that slide to give you an orientation when we talk about the one thing or the other. But that's enough from my side. I want to get Markus Hemmerle from Sygnum on board to see how this actually works in practice. Markus?
Thanks a lot. Good afternoon. It's a pleasure to be here. And sorry, maybe you have to forgive me about the example I'm going to use. It might be a bit of a sensitive topic in Germany right now, but believe me, it's also a sensitive topic. Sometimes in Switzerland, where I'm from, I want to talk about the value of things, the value of products and services, and the value that they create to the users. Starting with public railway transportation, you would maybe think about being it fast, being it cheap, being it reliable, also cost-efficient, sustainable. But think about decentralized finance, institutional-grade decentralized finance. There might also be, despite the fact that it was suffering in the last couple of months and years for different reasons, including regulatory reasons, just natural development of technology and getting more mature. Same thing could be for decentralized finance. The efficiency, empowerment, financial inclusion, different topics that really drive intrinsic value of that. But you know, it's a fact. This is only true, and that's the disclaimer, if it's done right. And I think that decentralized finance has been a lot of learning, development, and it's now the time when decentralized finance is ready for institutions to be utilized. Now, whether and how to engage with decentralized finance, that's a question that should be answered very consciously, well-informed, and for the right reason. And Sygnum is doing only crypto asset banking, a fully dedicated a business case on that specific part within financial services, but nevertheless, we're asking the same question every day again. Why do we engage with specific new technologies on blockchain? Why do we invest into business cases that might be beneficial for our clients, for the ecosystem, and improve different processes within the financial system? But it could also at the same time be that we say no to some things because they're not ready, because there's no regulatory clarity, because there's no client demand, or because a business case, a use case is just not delivering additional marginal value compared to traditional solutions. Now, what I would also like to say is, I think the time is now, right? The future of finance, time to engage with new technologies like blockchain-based financial services is right now, and not just something we should think about to come in the next couple of years, because there are various different use cases that we already perform, that a lot of other regulated players already perform now, and it's actually happening right now. You know, around investing or earning yield, engaging with staking mechanisms, running your own staking nodes, investing into tokens, having different sorts of investment strategies, not just about buying Bitcoin and that's it. There's a huge variety of different ways to engage and deliver services. But not only just investing into, but also using platforms for different reasons. And one reason or one use case I would like to highlight a bit more, it's an on-chain asset management proof of concept we're doing currently with Enzyme. I'm a part of the asset management team at Signum, so that's a bit my focus topic. And I would like to show you just how that could look like in a fully regulated and compliant way, covering a lot of topics that have been now built out and solutions have been found. So let's start on the left lower side with custody and client flows, getting client assets into the decentralized finance, fully AML and KYC compliant, having a seamless user experience, and also safekeeping the assets on highest standard. That's something which is possible when engaging with on-chain protocols. Another topic, independent price sources with price oracles to have proper valuation of the assets at any time, having real-time net asset values of a pooled investment vehicle in that sense. Having smart contract governance, making sure that the smart contract is not changed for the bad of the investors, having time lags between the decision and the actual implementation, and being able to actively decide whether to accept smart contract changes or not. Integrate with trading platforms and liquidity aggregators like we do with 0x, having multiple marketplaces to include into trading those tokens, but also an interface with API or with a web-based application like Enzyme allows to use, gives investors 24/7 transparency on what their assets are doing, what transactions are done. They can integrate their own API and take advantage of that fully 24/7 automated way of doing asset management. So with that, I would like to conclude, and let's start with the discussion.
Thank you, Markus. Would the other panelists please enter the stage now? Hagen, Jonathan, Peter, welcome on stage. Glad to have you. Could you please shortly introduce yourself, who you are, what you do in this space?
Absolutely, Hagen Weiß. I'm a lawyer with Dentons based in Frankfurt and Berlin. I do advise clients in all things digital assets, digital finance, heavy focus on crypto and blockchain, which even kind of makes sense because before my current job, I used to be a public servant, a regulator, federal director of BaFin, the Federal Ministry of Finance, and the jurisdiction of the Federal Chancellery in Berlin. And that's where I actually got to draft Germany's first Electronic Securities Act, and I also negotiated MiCA, the DLT regime, and DORA. Thank you.
Thank you.
Well, then I'll just continue. So I'm Jonathan. I'm at Zuehlke. They're responsible for the marketing and what their platform strategy. What is it what we do at Zuehlke? Maybe briefly explained. At Zuehlke, we basically build decentralized operating system on a blockchain or as a blockchain and offer an application store on top of it for financial institutions. And we are offering the software to those financial institutions so that they can, for example, issue securities, crypto fund shares, like in January, DECA issued crypto fund shares, and that's what we do, creating a hub for financial institutions.
Very nice. Peter?
All right, then it's me. Hi, I'm Peter. I'm CTO and co-founder at Unstoppable Finance. So we so far built the third most used Solana blockchain wallet with the intention to bring DeFi to the masses, kind of like for the retail users. Half a year ago, we decided to go a different route, and currently we're building the first really on-chain, so like blockchain-based bank. For me, it's the second time that I'm founding a bank. So I was co-founding CTO at Solaris Bank a couple of years ago, and also like from being there from the first day, building up all the infrastructure, also getting the banking license, making the bank also running in a compliant way, guiding them also into the blockchain space, so that we had a few customers in the blockchain space already very early on, and I was able to afterwards become the MD and CTO for Börse Stuttgart Digital Exchange, and we built up a regulated crypto exchange or digital asset exchange for Börse Stuttgart. But yeah, so for me, so maybe to describe me also in short words, it was just I started my career as a techie, but then traveled from centralized finance or from TradFi over centralized finance at Börse Stuttgart to DeFi with Unstoppable Finance right now.
As you can see, we have many progressive minds on stage, but before we get carried away, I'd like to start with you, Hagen. We showed quite an opportunistic intro that we say, okay, DeFi is ready for prime time, as Markus said it. But many people in the audience will have big question marks about the regulatory side of things. I think they might argue we don't even have our custody solutions up and ready, and you guys talk about the value layer to make money out of that. So you've been on the other side, you've been at BaFin. What's possible with DeFi these days, maybe in Germany, Europe, or elsewhere? What's your current take? What are your clients asking you to do?
Well, trying to answer your first question first, quite a lot of things are possible when it comes to the DeFi space right now. We do have a pretty developed regulatory framework right now. It started around 2018 in Germany when we saw the first ICOs, STOs, and then we kind of like, compared those new crypto projects to the conventional legal framework. That was the first step. The regulator took a close look, a really interested look in terms of all crypto projects. And then from there developed, we had the blockchain strategy of the federal government. And then in September of 2020, we actually had something which is called the EU Digital Finance Package, which addressed the entire digital side of blockchain, and that technically involves DeFi too. So we obviously have all heard about MiCA, Markets in Crypto Assets Regulation. The kingpin when it comes to crypto regulation right now will be applicable this year. It's technically already entered into force. MiCA technically doesn't even deal with DeFi, at least the completely decentralized parts. There's a recital 26, that tells you if you are completely and utterly decentralized, you do not fall under the remit of MiCA. But keep in mind, if you are semi-decentralized, then MiCA will apply to you. And that brings us to the current regulatory stance. When it comes to BaFin, BaFin has somewhat developed a legal test for DeFi, 3 elements that need to be looked at consecutively. A, is it comparable to traditional financial services? Is it addressing the German market? And is there some form of centralized entity? If you can answer all of those elements in the affirmative, that means you're pretty much under the financial regulation umbrella. So that's when things get interesting. If you're not, if you are a puristic project, then you actually might stand a really good chance to be a trailblazer when it comes to the legal stuff.
Okay, that sounds quite encouraging, doesn't it? Cool. Any comments on that from your side?
Yeah, maybe one short addition, but also to explain, especially for the people here in the room who are not very deep in MiCA and like DeFi and really being able to distinguish all these terminology. I think a very good narrative to really to grasp it is the MiCA regulation is really about crypto assets and the definition what a crypto asset is, which is like cryptocurrencies and different tokenized assets, and about the services that are offered for those, like trading them, issuing them, so on and so forth. And DeFi is not about crypto assets, it's about financial services, but offering these financial services on a different technical platform. And therefore, so we really need to redefine, and that's also what Hagen just said, that you need to really look at it. So what's the same way how we deliver financial services today, but what is different because we have different technical components, this degree of decentralization, and I think that's the stretch, and therefore kind of this question about how to regulate DeFi is in the room because it's not 100% the same.
Okay. We heard a lot about very decentralized, but that's not always the case, and I think maybe that's the case for you, Jonathan. With Zwiad, you decided, and I want to go to the slide again to show what we're talking about. So Zwiad is something in the lower right corner, I think. You created a blockchain from banks for banks. I think I heard it like that being pitched to me. What is your main reasoning behind doing that?
Well, when we started back in 2018, actually, with tokenizing traditional securities, we were looking how we could put them on the chain and make them faster in the settlement, basically, how to steer liquidity better on a real-time case. And while we were working on it, we had faced multiple issues, and we saw that we kind of need a neutral and trustworthy environment where banks say, okay, I'd like to join that, to use it for my own cases and to be your counterpart, right? Because it's a platform business ultimately. One entity is not enough, you always need two. You always need some people to interact. The value is not in having a blockchain itself, the value is in having the interaction taken place. So we recognized that there was, from our point of view, not a proper offering for financial institutions to have a neutral and trustworthy environment that they could work with and assess based on the regulation and the requirements they have surrounding it. For example, the prudential treatment of crypto asset exposure from Basel IV, which is now coming as well and coming into force on the 1st of January 2025, is clearly distinguishing between on which infrastructure do you actually have your asset on. And so we said, well, what we are about to do is we use the open source components that are there, that is basically driving the entire innovation space, and use this to create a sidechain with the proper governance that banks and financial institutions can assess and clearly work with, because they can clearly distinguish what are our risks and which not, because decentralization cannot mean I'm not responsible. And that's the key element that we are adding, I would say, as a key ingredient. And based on top of that institutional blockchain layer, it's open to anyone to deploy its own solution, etc., to financial institutions or to even other cases. But what we are just checking is that this infrastructure, that it is sound, and that there is a clear liability in this case. For example, here we have two sponsors, LBBW and GFT, that are validators on our blockchain, and they have promised a certain availability. And if this is not met, we as Zwiad have to deal with certain interactions, I would say, with financial institutions, because we said, well, this environment is going to be there, right? And there can't be any hiccups.
I totally understand that point and that motivation, but we all know how important network effects are. So do you see any chances once a bank is issuing their own digital assets on top of Zwiad? Do you see possibilities to interact with the DeFi space and somehow nurture these network effects?
Definitely. I think on one hand, we have the network effects on the network itself, right? So within the same platform, of course, you foster even more the network effect. However, what we are looking at currently as well, because of the ECB trials, we are looking into how to connect to other blockchains as well and to ensure interoperability.
Cool.
Right, for the means of payment, for example, it is obvious that the central banks, as we heard today as well, they will for now not issue on any other blockchain that is not their own. So we will have to connect somehow, and we are already deploying solutions for that. However, the key element is not just connecting. The tech part is usually the part that is the easiest to solve, to be honest. The governance, the legal, how's the relationship, properly defining that so that you can can't argue anymore how the relationship and liabilities are. That's usually the hard work.
Okay.
Yeah.
Thank you. Peter, back to you. When we spoke lastly, you literally told me you're building a DeFi bank, a blockchain-based bank. This sounds very contrary to what Jonathan just said, or do you see it complementary? Do you see yourself as kind of competitors, or do you think this will somehow play together at a certain point in time?
Yeah, so I think first of all, because also he describes it as like an operating system also for banks running their digital asset business on top of it. And if we do the comparison with the traditional IT world, so there's also multiple operating systems. And I think the more successful ones are the ones that are also in a kind of way interoperable to each other, so that you in the end can run the whole world on like different IT stacks. And I think that's the same that is already in the traditional banking world today. So let's call the SEPA network the layer 1 blockchain, kind of like of the traditional world, and the core banking systems, the layer 2s, kind of like where like everyone has a different technology running, and it's also still interoperable. And I think we're facing a blockchain or like a blockchain technology-based future as well that's building on top of different technologies, and this is also where we come into play, because in the end, what we're thinking about is so if you start a bank today, and especially targeting a specific vector of customers, and for us it's this chain native industry, so which will now be enforced also by the introduction of MiCA as a regulation, kind of legalizing crypto businesses all across Europe. So they of course natively swap assets on chains and are connected to different blockchains, and tokenized assets have stable coins as a means of payments and settlement. And we want to build our bank kind of core banking system on top of an internal blockchain, so which then in the end, I know it's a legal term, but kind of treats the deposits as a tokenized deposit. Of course, for us first, like in our vertical, because that's kind of the start of the kind of like of the process of the cell splitting to have our own cell and running on top of that, and that of course then bears the opportunity that other players could start using it as well. And I think so there's definitely different approaches, kind of to, let's say, make blockchain technology also in the institutional space kind of mainstream. Okay. Of course, there's let's say, the way, like doing this in an institutional way, kind of having contractual agreements, the technology and so on, and trying to start with a whole network. But I think always in conflict with what's the business case, what we can earn, so where are the cost regression effects and so on. And there's like a huge upfront investment, but how much business is coming in through this new infrastructure? And I think that's usually making the project slower, because kind of the business is there in 5 years, but it's not here today. So therefore, it's difficult to define a business case for this. And we want to start like from where the business is already, and that's kind of like the MiCA world with crypto assets and so on, and targeting these players. And I think with like a network that's already used at a certain scale, we believe when the tokenized MiFID world then also picks up, that we can kind of carry over and show that the concept works.
Makes sense.
And if I may just jump in here, I think also in the past discussions around DeFi and generally crypto and regulation, for example, has been very binary, right? It has been about, should it be allowed or not? Should it be public blockchain or private blockchain? Should it be only permissioned or permissionless? Different questions were in the room, and I think it's also time, and it has been a dynamic that we see it more like evolving and opening up for different topics. And finally, the users of the protocol, the user of the application on the blockchain decides whether it generates value for clients or not. And that has also been driving, I think, some of the most successful DeFi protocols and also some of the most successful integrations into DeFi, because there is an actual business case, there is actual regulatory clarity to engage with that technology and make it a benefit for users and investors. And therefore I think that's also part of the mindset that maybe needs to combine politics, business, technology, to be a bit more flexible in the way of discussing solutions and finding actual value creation.
That's really cool, and leads me to my next question, naturally. Okay. You seem to be at the very forefront of innovation, what you do at Zuehlke, what you just showed. What are your guiding principles when you enter this new terrain? Can you give us and the audience an idea how your leadership team decides what to do and what not to do?
Yeah, I think it's pretty much along the lines I was just pointing out, right? We didn't onboard a single client before we were fully compliant and had the banking license. That was a prerequisite because we didn't want to build legacy before we actually started as a bank, and I think that was a super wise decision from our founders and the leadership team, and that has been the same along the way that we're now going. But at the same time, we're also, I'm usually using that, picture of the game Jenga, those pieces of wood, and some you can push and some you can't. So push the ones you can move, leave the others so the tower doesn't fall. And I think that's also a bit of a picture I like to see. We have just been discussing about staking in Switzerland. Who can do it? How does it need to be done? Can you do non-custodial staking? Can you only do custodial staking? Things like that. But it's good to have a non-political discussion and having solution-oriented, and I think that was also the way we are doing that at Signum. We're trying to find use cases that can be generating value, that are regulatory compliant, but still are at the forefront of innovation and trying to move and not just to follow. So that's a bit the way we look at it. And we're still a startup, so we need to make sure we spend money wisely, like money in the space. So.
You know that Jenga ends when the tower falls. I hope this won't be the case. You
right.
pick the right one.
maybe that's also pointing to some of the traditional financial system, right? Yeah. Some things were pushed, and maybe they were pushed a bit too far, and we need to rebuild a bit, or at least the pieces of the tower, so we can keep growing, and adding new pieces of wood to keep it growing and make it more user-friendly. So yeah, it's true, right? I didn't think about the tower to fall, but maybe it's also the picture of the whole financial system to include new forces, new solutions to not make it fall.
And I think you need to be a bit audacious to get forward, otherwise you will lose the game. But Hagen, back to you. DeFi is very much built upon smart contracts, and I was wondering, what do these smart contracts actually bring to the regulatory framework? You think a lot about that question, I think. How can regulatory frameworks be baked into smart contracts or into token designs, I think? Could you tell us some points about that one?
Yeah, absolutely, because that would be a true evolution, the next step, that would be the next level, that would be absolutely desirable if we actually utilized the benefits of that technology for the legal side, the law per se, and also for the regulators and policymakers. We could even talk about a concept, for instance, which is called embedded supervision, which makes everything faster, more reliable, and also more transparent. Embedded supervision is basically smart contracts and blockchain per se, reporting automatically back to the regulator. There's no need for the actual intermediary to basically go in and create friction and then create basically a lengthened time frame, that kind of stuff. So you can actually utilize smart contracts to work possibly towards the law, towards being compliant automatically. And that's not getting rid of all the compliance officers and the people working for the regulator actually supervising things. That's actually just streamlining things and making this jurisdiction here in Germany or in Europe, for that matter, basically a unicorn when it comes to jurisdictions. We just need to be somewhat bold and maybe even audacious and take that step.
Okay. Which brings me back to Peter, because when we talked last week, you told me about when you were at Solaris Bank, you were the first one to show auditors code in GitHub instead of PDF documents, and now you will show them smart contract code for their audits. How do you do that, and what's the reaction?
Well, so first of all, I think when we started Solaris back in 2013, it was kind of in a time where, for example, infrastructure as code wasn't such a big thing as it is today. And kind of like the story was when we had our first audits, like the question, okay, so where's the emergency concept? Where's the folder? We said like, hey, that's actually a file that we distribute over different storage devices so that we can kind of trigger the recovery and kind of like restarting the whole infrastructure with a button click from almost everywhere just in case. And kind of like this concept in the end was then baked into our IT strategy back then as well, so that we called it compliance as code. So which means the more you can automate and the more transparent things are, and you can audit them and so on, and you can make sure that the processes are executed the same way. Because from my point of view, when it comes to regulation of especially also the traditional world, so we have a lot of regulation around kind of 4I principle and so on and so forth, because we need to make sure that processes are executed the same way all across like whatever departments, different people changing between companies and so on. And because in the end, you know it maybe from yourself, you shouldn't go over a red traffic light, but sometimes you do this. So, and in the end, if humans don't stick to the rule, you need to have more control mechanisms to make sure that things are working properly, and especially in banks and regulated institutes. And this is kind of where also what Hagen described with DeFi. DeFi in the end, smart contract-based financial services, is like a fully automized form of delivering, for example, a loan or a certain bank service to a customer. So which means the whole kind of process of delivering that service is baked into code, and with that, even that add-on, that code on a blockchain can't be changed that easily, and especially can't be changed without being seen that it was changed. And the result from my point of view is that you can reach almost 100% degree of compliance as code when building your banking services on top of that, because in the end you have the audit trail, you have the full transparency, you have this automized execution, which of course is very cost effective, and at the same time you really make sure that the process is always executed the same way, which gives a lot of regulatory clarity and potentially even cost regression effects, because you can kind of give verifications and proofs much more easy than you can do with process charts and so on.
Cool. Jonathan, you built your own world, but still it's running a private version of Ethereum, as I learned. And so smart contracts are also part of your world. Are you also inspired by what DeFi protocols are doing? Is your team watching what they are doing? When you create your own smart contracts, do you derive in the meaning of the picture I showed? Do you inspect what's going on there and copy the best out of this world for your own purposes? Or how can I imagine that?
Well, we definitely look at that, because I mean, you have to assess which kind of concepts are working. Right, and the nice thing is that it's already been tried out a little bit, and you can see, okay, this worked, this wasn't adapted, why, etc. So you always get already some validated learning in that way, even though there's always the transfer that you have to do to the institutional setup. Would this work here as well? And if not, what we have to change for that? And I think that's ultimately then, again, the hurdle as well to understand the regulatory part and the processes of the financial industry, on how they actually work, or how they could work, maybe, looking to Peter in that case, and trying to embed this into the technology setup. And that's definitely something that anyone that is in this industry has to do. I think there is no difference for us. The only thing is that we deploy this then on our blockchain, because we see that this brings an added value to the customer. Absolutely. But anyone who is doing anything in that realm has to do this.
Cool. Markus, maybe back to you and a bit more international, because Sygnum is operating in Switzerland and Singapore, and I know you're looking for other destinations where your services might be needed. Which are the interesting destinations for you, and how much is the openness from the regulatory side decisive for your decision where to actually go and deploy your services?
Yeah, I was actually just thinking about when you talked both about, having compliance in code, and I thought, let's say, an application is just one application around the globe, it's decentralized. How do you build in the different regulatory environments for different countries into one single application or blockchain to make it happen? But you know, it's a similar question with traditional compliance or regulatory clarity, and I think for us, and that's also again back in 2018, a great decision our leadership team took is to go to places where regulatory clarity is one part, but also kind of a stable path towards regulatory clarity and further business cases to be included, and also a good discussion, which is, as I said before already, not too political, because what we see and where we have the biggest issues in domiciles like the States, you know, it's because it's very political. It's interest driven, it's not solutions and technology driven. And we think that that these are topics that are relevant for us to invest, because it's, you know, it's basically for every investment. If you're building a company, you don't want to spend money and lose it just because it will not be possible to offer that service at the later stage without any further notice or any chance to adapt to the new situation. And therefore that's pretty important for us, and therefore I think Singapore and Switzerland are great places to be. I think also Europe has made a huge step to welcome more business and more innovation in that space. We see very big dynamics in the Middle East, while in the Middle East I think the clarity is more about to develop and be established. It has been also, you know, some companies got licenses before actual regulations were out, so they were just for business reasons also domiciled there. Okay. But still, you know, the demand is there. There is the will to allow for business, and that's definitely also driving our decisions.
Okay. We see on the charts that DeFi is playing in the financial value layer from my perspective, and let's stick there for a moment, and I'd stay with you, Markus. When we talked, you said that's your main driver. You look for the value. What's the value for the investor? What's the value in it for the asset managers? Can you give us a short idea where on this picture, where is the value right here, right now? What are services that you actively offer in that space? And why is this better than what we know from the traditional financial world?
I mean, we're actually providing a lot of services in a broad space, and you know, some of those are a first step into compliant, comfortable, but safe access to that space, and it's still to evolve. I think that currently, you know, seamless user experience will be one of the next discussions. I just had one discussion outside before where, you know, to make blockchain and the crypto technology not even really seen, but just felt through the service, the benefits you get, not to have a hassle with private keys and getting access, but just use it as a user, as you use your iPhone, as you use whatever other technology. I think that's one large driver. I think still interoperability between different service providers is a big topic, right? As we heard before, you can build a service, but if your auditor, if your fund admin, if whatever it is cannot integrate, cannot use, you will have a break there again, which is not really generating the efficiency you need. And I think other topics like compliance or financial reporting, things like that, need to follow to actually make the full value creation there. And I think also what the benefit and the value creator is that a lot of those companies, they are away from any traditional business, any legacy, and they can just start building what actually makes sense, while a lot of companies, they have legacy business and it's hard to maybe get a step ahead.
Maybe also adding on top, to me, I think DeFi can really achieve what FinTech tried kind of 10 years ago to achieve, because kind of like when FinTech started, it wanted to kind of reinvent how finance and banking services are delivered to the customer, but in the end only innovated on the front-end level.
UI.
And with DeFi, we now have the opportunity that we can really innovate the full stack, like the whole underlying infrastructure that is used for that. And to give you one example, so right now we have like multiple ecosystems where digital money exists, and kind of like almost every digital ecosystem has their own money. Yeah, so there is whatever the fiat money world, there is the stablecoin world and the crypto world, there's the different e-money solutions that are all silos kind of where e-money is used. And I think with tokenized money, we already have the opportunity to kind of bring all the digital ecosystems together and make them interoperable at an infrastructure level, which is amazing. And I think on top, kind of, I think everything that we already said also during the last half an hour, we can automate a lot. We can build global infrastructures, and for example, also then really manage like global liquidity and kind of like assets that we can trade that are not only issued in our jurisdiction, that also come from different jurisdictions, making the investment more easy. I think that's in the end kind of. I think it's always difficult when kind of like the prime value first is not like for the user, that kind of like it's an indirect value for the user, because kind of the whole infrastructure will reshape, and then there's the positive consequence for the user that she can trade more assets, you have global liquidity, it's faster, cheaper, and so on.
Maybe
Jonathan wants to add.
Exactly, maybe I can jump in there, because I mean, that was kind of like the main motivation why we started in 2018 when we looked at it, because I mean, we did not have this picture, right? But we noticed that on the financial value layer, if I can manage liquidity in real time instead of T+2, I can unleash so much capital in the market, which is now just to be compliant with the requirements, which is okay. We have these requirements for a reason, but there's always some safety margin above this to not ever get a notice, oh, this looked very short, etc. So all those potentials that are currently caught in operational, in operational issues, I would say, yeah, because you have settlement times, because you have frictions, because you are not looking at the same truth, yeah, on the same data, because you always have to call the other. Is it true that you see this ISIN with this quantity at this date? Well, I have a different timestamp on it. Okay, and then the chain of communication starts. So I think it is about looking on the same set of data and knowing this is the truth. And then, as you mentioned it already as well, it's kind of like that we can create this new layer, but there are different interests in the market, and the banks, for example, that are using, for example, this wired infrastructure as well, they're using the infrastructure jointly, but they're competitors as well, right? They are different banks, so they have their own business setups. So what we are striving for in this case is kind of creating I always like to call it cooperative competition. Right? You work together on the infrastructure layer, you are in competition on the business layer and financial value layer, but the advantages are so huge. Additional capital you can invest into, you can reduce the bars of minimum investment, etc. So these benefits then, maybe they come indirect in a second step.
But they come.
But they come, and usually you need someone to listen to you for maybe a second longer than improving just the front end, because it looks fancy, but the business results will come with changing the engine. Right.
Absolutely. Thank you very much, my panelists. There's one more thing, and that's a survey. So I hope we inspired you a little bit, that this topic is quite interesting for the maybe next 10 years. Maybe it might take longer, but then it will come in full speed. So if you are somewhat related to that space, I would really ask you, just take about 10 minutes to fill out the survey. Would be really happy. We're also doing a market study about the topic at the moment. So if you want to be interviewed, please get in touch with me. Guys, thank you very much. Thank you very much, audience. Thank you very much, Corinna and Max, for having us.